Hello and welcome to another episode of Brew Time with me, Vincent Hung. On this channel I like to talk about all things to do with personal and financial well-being. Now this channel is called Brew Time, but I rarely talk about the brew that I actually drink. But today I need to shout out to this strawberry and banana milkshake, which I've made using this oat milk, which is absolutely brilliant. It's not a paid promotion, but I thought I'd just share what I like to drink. So on my previous episode, I spoke about buying a property versus buying stocks. And the conclusion of that video was I decided to go with stocks. And that's purely because of the proportion of money that I have in my property versus stocks. If you haven't seen that video, check it out up here. Was it here? Either side. So when I was filming that and when I was actually deciding what to invest in, I came up with something quite interesting actually, because to buy property, you can actually buy it through a personal buy-to-let property, or you can buy it through a limited company. And I've been trying to do research on both, but I couldn't get a clear answer. People tend to say if you go for 2 or 3 or more properties, you go with a limited company. But then if I'm buying on a personal, I'm paying 40% tax. So that got me thinking, what actually gives me more money? Do I go for a personal buy-to-let? Do I go for a limited company buy-to-let? Or do I just not buy property at all and just put that in stocks? And in this video, I'm going to share with you what I found. So let's get to the technical stuff. So when I was looking for an investment property, I was looking for something about £200,000. Now I found some about 40 square metre, 1-bedroom or studio apartments in London, which I thought fit the bill. So to finance this property, I was going to put down £50,000 deposit, which meant I had to borrow £150,000 mortgage. Now this £50,000 is not the only thing I actually have to pay. I actually have to pay stamp duty and I also have to pay certain fees. So solicitor fees is the main one. The stamp duty for this particular property I calculated to be about £7,500 and solicitor's fees are about £1,500. So in total I would have actually put in £59,000 to buy this £200,000 property. So now that I explained how I would finance it, let's get into the spreadsheet and see which is more profitable. So here's a spreadsheet where I calculated the profitability of having a personal buy-to-let property versus a limited company buy-to-let. So the income for both would be the same. So I called up some agents and they said I could comfortably get £900 to £1,000 per calendar month, which is about a 5.5% yield. This means that on a yearly basis, I get £10,800 in income. For a personal mortgage, my mortgage rate is slightly lower. It's seen to be more risky lending to a business. So for a business, the mortgage rate is actually higher. So I've done a little bit of research and I've assumed a 3% interest rate for a limited company mortgage and a 2.2% for a personal mortgage, which meant that the interest on the personal mortgage would be £275 per calendar month and the mortgage for the limited company would be £375 per month. So note this is interest only. I'm not repaying back the loan just because that's actually better for cash flow, so I can invest that elsewhere. So the interest for the year for a personal buy-to-let would be £3,300 and the interest for a limited company would be £4,500. So the interest payment is the biggest expense, but there are other expenses when you're letting out a property. So if you have a buy-to-let, that is seen as extra income. So you will need an accountant to help you do your self-assessments or file your company taxes. This is actually cheaper for a personal, so I did speak to an accountant and they said if they were to do my self-assessment for me, they would charge me £250 per year, but if they were to do it for a limited company, they would actually have to charge me £600. So that's an extra expense for a limited company. The maintenance, the rental agent fees, the service and ground rent, the insurance, that's all the same no matter if you go through a personal route or a limited company. So the next line is where there are more significant differences. So for a personal buy-to-let, your tax is charged on your income, but you cannot deduct your interest payments when calculating your taxable income. So what that means is your taxable income becomes a lot more. So you'd have to pay your tax rate on a larger portion. Whereas if you look at the limited company, your taxable income is actually a lot less because you can take off the interest charge. So you can take off the £4,500 off of your income to calculate your taxable income. So this is where the major difference lies. The next major difference is the tax rate that you pay. For me, I would be on a 40% tax rate. So for the £7,400 taxable income, I would have to pay 40% tax. However, for a limited company, you pay 19% tax. Now, this is due to change. I think in the next year, they will put that up to 25%. However, for any company with an income of less than £50,000, you will still pay the 19%. So my tax expense is almost £3,000 for a personal buy-to-let. However, if I went down the company route, my tax expense is a lot less at £485. So what that means is, if I were to buy this property under my personal name, I would get £1,140 profit for the year. However, if I bought it through a company, I will get just over £2,000 profit for the year. So that gives me a 1.93% return on investment for a personal buy-to-let, but a 3.5% return on investment if I were to go through a limited company. So that got me thinking, if the returns are so low, can I actually get more on the stock market? But what I need to calculate is what that brings me over 10 years, because let's be honest, if I buy a property, I want to keep it for 10 years to generate me some income. If I assume a 4% increase in property prices year on year, after 10 years, my property value would be £296,000. So that's a decent profit. My rental income over the 10 years would be £11,400 for a personal buy-to-let, and it will be £20,655 for a company. At the end of the 10 years, if I assume I will sell the property, I will need to pay back my £150,000 which I borrowed from the bank and pay some agent's fees. So that means I'll make a profit of £151,528 if I were to get a personal buy-to-let property. But if I were to go down the limited company route, I will get a profit of £160,000. So for £1,000 a year, so that's what, less than £100 a month. Is it worth setting up a limited company, going through all that hassle to buy this property, or should I just go through my personal? Well, this is why a lot of people say if you don't have a portfolio of properties, or if you're not intending on building a portfolio of properties, you might as well go personal, because the difference in terms of profit that you make is not that large, even if you are paying the 40% tax. But if you start building up a property portfolio, and you may want to pass that on to your children, then a limited company might be the option for you. But then what if I compare that to stocks? Because at the end of the day, in my previous video, I did say that I chose stocks over property. So if I put that £59,000 in the stock market and invested that for 10 years, what would my return be? So if I took the 59,000 and put it into the S&P 500, which has been gaining about 10% year on year over the last 25 years, I get £153,000 from the 59,000 I invested. I also get dividends, and the average dividend yield for the last few years is about 1.5%. So I get 9,500 in dividends or thereabouts. So in total I get 162,500 from my £59,000 investments over the 10 years. So as I mentioned in my previous video, if you buy into a fund or an ETF, the effort's actually very little. However, with a property, you need to do maintenance, you need to deal with tenants, you need to find tenants, you need to find new tenants if your tenants decide to move out. So there's a lot more effort in making that money. So I hope you found that useful, and seeing as you watched to the end, I'm assuming that you liked this video. So please smash that like button and subscribe to my channel, as that really does help me. But for now, I'm going to head out, and I'll see you in the next video.